So Tesla is up almost 90% from the lows from just a couple months ago this year. And the natural inclination after a huge rally like this is not for people to want to pull back. It's we're going higher and going faster. So we want to be adding exposure and adding to leaps and doing other things like that that will allow us to participate more further in the upside that we all think is going to come from here. So we want to spend a little bit today to talk about this potential FOMO. We are huge bulls in the stock, so this is not to say that we think the stock is going down or that it's overvalued right now, but it's just to kind of put a check on sentiment that is a little peaky, a little frothy right now, and maybe give a little bit of caution to our clients.
Yeah, so when Matt says that we should be adding here or adding leaps or whatever, this is what we're hearing from people in our conversations, but also seeing, what we're seeing on X. There's just a lot of FOMO, and people want to explain this on, short squeeze, a gamma squeeze. I don't think this is short driven by short covering. Some shorts may have covered, but Tesla has less than 4% of its shares outstanding that are sold short to our knowledge. And this represents like less than 2 days worth of trading. So this is not in any kind of territory where shorts would suddenly be needing to scramble. Now, certainly if they've been short since April, the value of their short has gone against them by 100%. So if they were short like $1,000, now they're short $2,000. And what shorts have to do then, if they want to kind of rebalance and maintain that exposure, is they have to buy the stock. So there could be that covering that's happening, but it's not something that they have to do. There are other theories about gamma squeeze, which is when people would just buy a bunch of calls. And I know there was an influencer that's been talking about, buying Tesla calls. There have been other influencers talking about that. I don't think this is suddenly from a gamma squeeze. We had some good news that triggered all this, right? Let's talk about it. The production and delivery report and the extra surprise we got on that.
Yeah, so fundamentals definitely seems to be the driving force here. It was probably a bit oversold on the way down, which we also were talking about. I mean, Bradford and I think both have tweets from April talking about how this negative sentiment was a bit overblown, and how a lot of the kind of influencers at that time talking about either adding to their short position on Tesla or advising their own clients to leave. We thought that was a mistake and overly kind of short-term focused on delivery weakness, which we were very much acknowledging. But what we got was a pretty significant beat on deliveries, on vehicle deliveries. But much more importantly, and the bigger surprise was the absolutely massive beat on energy deployments. There's a couple of videos we've done kind of talking about the magnitude of this, so we won't go over all the details. But I think to suffice it to say, there is a very real fundamental beat on Tesla Energy, which is, I think, forcing a lot of analysts to go back and start adding in that piece of the business for those who haven't. And even for those like us who did include it already, we're needing to increase our own earnings estimates in the short term and in the medium term to account for just a greater ramp up than I think we were expecting. So that is, that kind of forcing revisions upwards to your earnings estimates is like the exact opposite of what we've had in Tesla for the past 2 years or so, just where analysts were continually revising their earnings estimates down. Now we're at the point where I think most analysts who are objective about this would be forecasting pretty reasonable earnings growth next year, driven largely on the back of energy. And then if the vehicle sales also do pick up, then that could be very good news as well. So I think this is more about fundamentals than about a short squeeze or a gamma squeeze. I've heard a lot of people also talking about like autonomy and how we're almost there. And as bullish as I am on that piece of it too, the delay that we've seen in rollout of new versions, 12.4 in particular, we were at a much higher cadence of these releases earlier in the year, and now this cadence of releases has slowed down very significantly. So we've been through this before, and this is why I'm feeling a decent amount of caution around like any expectations of like launching a rideshare network this year or something like, or not a rideshare network, a robotaxi network, anytime in the short term. We're still very bullish on that opportunity in the long term, but I don't think that all of a sudden we're going to all-time highs this year on the back of like robotaxi excitement and AI. Fundamentals are improving. I think that's the real story here. But a lot of the other stuff I would just urge caution on and more realistic timelines.
And we're also seeing just people are a little too optimistic about how much economics of the mega pack surge that Tesla is going to recognize. We don't think they're suddenly going to be able to recognize 100% of the revenues of this multiplied amount that they've been able to do, where they did 10 gigawatt hours in a quarter, going from 4 gigawatt hours in a quarter. So that'll happen on a delayed basis. It will be meaningful, and the profits will be good from that. But it may not be as much as people think it'll be initially. So like earnings at bottoms, and there are things to look forward to. I want to share some numbers that Dylan Loomis pulled together, and what he said is dating back to 2021. Tesla stock has had 3 significant and aggressive moves to the upside. What we're seeing now has happened before. And he points to 2021 up 127% in 168 days, 2023 113%, 41 days, 2023 again 97% in 84 days. And he says that Tesla is currently up 91% over the past 77 days. I think that's, versus April 22nd. And he says in each of these prior moves like this, Tesla stock then saw a 30% pullback in the following weeks. And so, I just say here, history suggests a breather is in order from here. So, we're seeing a lot of FOMO. People think it's just going to keep going, that like this freight train has started. And I agree with Matt. I think a little caution is in order. And if you never take advantage of, I think there's this opportunity where you could take advantage of sentimental highs in a stock. So, certainly we think Tesla is very undervalued compared to the potential in robotaxi, but more especially, if they become the leader in humanoid robots, it's greatly undervalued. But right now, like, everyone just thinks the stock's going higher and keep going higher. And that's typically a time you want to be thinking about trimming back on how much risk you have.
Yeah, and I just want to add to that. When we talk to Tesla investors, all-in investors, or people who hold a significant amount of shares, and we talk about the concept of trimming and adding, they're always like, "Oh yeah, that makes tons of sense." But when you get into a moment right now where you actually have that conversation of, not for everybody, every situation is different, but this would be a type of situation where we might have that conversation about trimming. And almost universally, nobody wants to trim when things are going higher. So it's very counterintuitive. It runs very counter to your own kind of emotions. But it's the sort of thing that I think if you agree in principle that you want to be kind of trimming some highs and adding to lows, we were very much advocating for adding to lows earlier this year, but you have to have the dry powder in order to do that. So this is not financial advice by any stretch. I just want to talk about this kind of conceptually more than anything. But that is something where, I think wanting to like the fundamentals of Tesla have absolutely improved. And we very much believe in the long term of the trajectory of the company and where they're going. But the kind of violent move upward that we've seen is oftentimes indicative of maybe a local high that could have some opportunity to rebuy in at a lower price. Just some kind of thoughts there. Again, nothing specific, no investment advice on that. I want to be very clear. Every situation is different for every person, but it's very easy to understand that you want to do that in a conceptual way, trimming and adding, but very
Mm.
hard to do it in a moment like this where you're just convinced that the stock's going to rip higher.
Exactly. Buy low, sell high sounds boring and it sounds easy, but when you're in it, our human instincts are we want to keep running with the herd. We want to fish where others are fishing. That's the FOMO, that's the excitement, the euphoria. That's what we're feeling now. And at a bare minimum, just conceptually speaking, like if you don't have the dry powder when sentiment is low, just hang in there. Um, but there might be an opportunity now to make some adjustments. Anyhow, this is not financial advice. Everyone needs to consider their risks, their goals. A lot of people have goals for how many Tesla shares they want to have, or Nvidia shares, or whatever it is. That's personal to you, and what you do with that is up to you. Um, and I think we'll wrap it up there. Thank you, Matt. And I'll say it's been good talking with you, and bye for now.
Bye for now.